Obviously, if you have bad credit and you have a startup, you have two things that are going against you, right? So you got to really try to figure out the best strategy to get the business loan that you need for your startup, even if you have poor credit. And so this is what this conversation will be about. I want to show you a few hacks and the latest hacks that are really working like crazy, so you can get your cash real quick, no matter what kind of credit you have. So here's the overview I really want you to pay attention to. So the big question is, can you get a startup business loan, let's say with a 500 credit score? That's a big question. The short answer is yes. Now the long answer is yes, but you might have to have some skin in the game. You might have to pay a higher APR. You might have to actually post collateral. You might have to do a couple of things. You might have to actually prepare a business plan. You might have to show some financial projections. The question is, are you willing to actually do those things? Because see, no bank or no lender for that matter is going to give you money to your startup with poor credit if you're not willing to have some skin in the game, boss. So my question to you is, have you thought about that? Do you have a plan right now do you have a business plan? Boss, talk to me. Again, I'm not talking about no sort of cheap ass business plan. I'm talking about a real business plan that you or somebody you have paid has written for you that clearly explains everything about the business. Okay. Obviously you have a startup. Is your startup legit? Have you filed the paperwork with the state authorities? If you have an LLC, do you have a certificate of good standing? Do you have a registered agent? Do you have you got to really do all those things, boss. Because see, you can't just take the excuse of I'm having poor credit, so I can qualify for a business loan. You don't qualify for a business loan because you don't learn the formula for success. Okay, because poor credit is just one thing, it's just one criterion, but there is a constellation of criteria that the lender is going to look at before approving or denying your business loan. By the way, boss, welcome back to the show. It's really a pleasure to have you here, and I love to have this kind of conversations all the time. Now, when we talk about a business loan for startups, sometimes we hear people talk about guaranteed approval. Is that a myth or is that's reality? That is neither. Okay, guaranteed approval is just what it is. There are some lenders that will guarantee approval for you, provided you actually have a compromise. And there are some lenders who don't want guaranteed approval. So it really depends on the kind of lender you talk to. So let me give you a few pro tips here. If you really have a poor credit, right, and you are a startup, you are looking for a business loan, fast approval, massive amount, you got to really think about a few things. First of all, you need to understand what lenders are looking for. So when lenders look at startup business loan applications, they are paying attention to a few things. First of all, how long have you been in business? Because simply because you're a startup doesn't mean you started yesterday or 2 days ago. You could still be a startup. You can be qualified as a startup if you started 9 months ago. The technical cutoff time is 1 year. So after 1 year, you consider like a new business or a small business. But before 1 year, before 12 to 18 months, you are still considered a startup. So how long have you been in business? And basically during that time, have you been able to establish business credit? Okay. Have you been able to establish, because see, we all know that your personal credit is really toast. Like your personal credit is bad. Okay. But what about your business credit? Have you been able to register your account on Dun & Bradstreet? Have your DUNS number? Those are things that you need to think about. Not just Dun & Bradstreet. You got to do Experian business and also Equifax, so that you can have your IntelliScore plus score. You can have your Dun & Bradstreet payday score. Those are important elements. Okay. What about your revenue? Are you able to generate something at all? Like, again, I don't want you to take the excuse of poor credit as a detrimental element that will actually just doom all your chances of getting a startup business loan. No, because you have poor credit, that's one thing. Now, I want you to talk to me about the other things, all the other things that are really going in your favor right now. Are you generating revenue? Any kind of revenue. Talk to me about that, boss. Talk to me about your revenue. If you're generating revenue, then this is really good. Okay. Now let me give you the approach I really want you to focus on. When we talk about poor credit, what is the cutoff here? Well, it really depends on whom you're asking. Some lenders will tell you, hey, listen, if you are around between 500 and 600, we think of you as poor credit. The SBA is thinking that if you have poor credit, you are below 640. Okay. The thing is, it's not really a matter of numbers at this point. You just know that you have poor credit if you are, let's just cut to the chase here. If you are below 580, you're poor credit. Okay. Now, poor credit is, again, this is not a killer thing, because you have other ways to actually counter attack or counter offer or counteract the detrimental effect, the potential detrimental effect that poor credit has on your startup loan application. Now, let me give you the review here that you really need to think about. When we talk about business loans for startups with poor credit, the hacks I want to show you here is that you need to be clear about the kind of lenders you are talking to. Okay. Again, those lenders, you might not like them, but they are who they are, and they are your only chance of having access to business credit. Okay. You're not going to find your banks, your regular banks. You're not going to find your credit unions. You're not going to find even some of your online lenders. They don't want to have none of that, because they're thinking you are a startup, you have poor credit. There's two negatives in one application. We don't want none of that. Okay. So you will probably have to talk to hard money lenders. Yes, hard money lenders could be one of your lifesavers here. And the thing is that, hard money lenders are not really that bad. The only thing is they charge a lot of interest. But hey, listen, this makes sense, because they need to cover their ass too. Okay, because the risk is really high. If you are a startup and you have bad credit, the risk is really high. So they are trying to make sure that they cover their ass. You also need to think about net 30 vendors or net 45 vendors. This is another source of business financing, especially if you have poor credit. Why? Because see, vendors, net 30 vendors or net 45 vendors, they have I would say an incentive to do business with you, because see, by offering you credit, they're actually making sales too. The only thing is they would just want to get paid, right? But see, when you're looking for a business loan and you can't get a 5-year business loan or a 3-year business loan, sometimes it's just better to try a different strategy. So instead of going for 3 years or 5 years or whatnot, go for 30 days, go for 45 days. Start small, start slowly, right? Slow and steady always win the game. Start small, slow and steady, always win the race. That is what I want to say here, is that when we talk about hard money lenders, vendor terms, we also have to remember also online business lenders. Okay, we also need to think about invoice factoring. Those players are there. They will work with you. They want to make sure that you get the loans you need. So what I'm trying to say here is that when you are looking for business loans for your startup and you have poor credit, don't just focus on traditional business loans. Don't think about your regular installment business loan at your regular bank or at your local credit union. I want you to cast a wider net to start looking at different types of business loans, because what you really care about is just cash. You need cash, that's all. Okay, so think about invoice factoring. Think about the online business loans. Think about vendor terms. Think about hard money lenders. I want you to think also about business cash advance. Okay. By the way, boss, let me quickly remind you, today's topic, we're having a conversation about business loans for startups with poor credit. I'm sharing with you a few hacks that will help you get the loan that you need and deserve. Okay. Now, when we talk about business cash advance, this is an interchangeable term with merchant cash advance. So basically, this is like you are usually swapping your electronic sales, okay, and with some cash advance. So you're getting cash in advance, but you have to actually swap. You have to show the lender your electronic sales. So this is kind of cool. And so the cost here is based on a factor rate, not an interest rate. So businesses that qualify may get approved for and funded in as little as 1 business day. So you can see here that if you have a startup and you are able to generate electronic sales, I'm talking about credit card sales or debit card sales. Okay. And you don't, like, your poor credit doesn't matter anymore, because this is an asset-based type of financing. Okay, so, and you also want to think about microloans, even though those microloans sometimes are really complicated. But hey, listen, if you're able to go to Kiva, for example, or you are able to get into Accion, ACCION, into their network, you might actually be able to tap into non-for-profit sort of microloans. Okay, or you can try equipment financing, for example. Okay, you can also try crowdfunding. So what I'm trying to say here is that there is a large constellation of options when it comes to poor credit and for your startups. The bottom line here is that you need to think about three things. I want you to think about your geography. I want you to think about your sector. And I want you to think about your own startup goals. Okay. What is your geography? Where are you located at? Which state are you at? Which city are you at? What is the ecosystem there? What's the economies there? Okay, we know nowadays we know that banks are filing for bankruptcy. We have the Wall Street Journal is talking about the stock market going up and down, blah 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 blah. But in all of this, how do you actually survive? Okay, your geography, your immediate geography, your remote geography. Talk to me about that. Let me give you a bonus here that you need to think about. Now, one thing you need to really keep in mind here is that sometimes there are two things you need to do if you're looking for a business loan for your startup with poor credit. Maybe you might need to lower your expectations. Let's say you wanna borrow $50,000, but you realize that there are no lenders right now in the market willing to give you that money. Then instead of getting $50,000, maybe bring down your fund needs to 10 grand or 15 grand and try to look for other lenders. Okay. Now you might want to tap into your friends and family network. I know they're not typically lenders, but again, cash is cash. Okay. Cash is cash. So if you have a large network in terms of financial ability and your friends and family can actually finance you, why not? I mean, why not give it a try? I mean, their APR will be lower anyway. I mean, you know them. The only problem here is that when you borrow from friends or family, you just have to make sure you pay them back, because if you default, there goes the whole relationship anyway. And you don't want that. Okay. And you can also tap into your own retirement funds. Again, if you lower the amount, you can start thinking about ways to actually get the funds yourself. You can tap into your IRA or 401k, okay? Or you can roll funds into a Rob's account when, the thing is you can use the funds from the Rob's account to fund the business. So one thing you need to understand here is that the options I'm giving you when it comes to retirement funds, I will not recommend those. But hey, listen, if you're desperate for cash and you just have this crazy, wonderful idea that you want to implement, maybe you should give it a try. But this is not something that our team recommends at all because they are risky. Okay, so you should not consider them without first getting professional advice to determine the potential tax implications. Okay, and also think about personal loans. You can use personal loans to actually fund your startup. Why not? I mean, maybe when I'm talking about poor credit, maybe your poor credit is at the business level, for example, because you started maybe 8 months ago or 12 months ago, and you just didn't hit it off on the right note. But if you happen to have somebody like your spouse or somebody in your family who can vouch for you, who can co-sign a loan for you, this could be also a possibility. So what I'm trying to say here is that I want you to explore several alternatives here to make sure that you are making the right choices. Okay, and you can even try to have small business grants. Like sometimes grants are harder to get and they're lengthier. The process is lengthier. But hey, listen, if you have patience, if you're not looking for a loan right away, if you're looking for funding, let's say 3 months from now, 6 months from now, then you might want to explore the whole thing about the small business grants. Okay. Let me give you some steps here in terms of how to actually choose the right financing option for your startup. Again, we are talking about business loans for startups with poor credit. How do you actually get the funds real quick? You need to understand that to qualify for a startup business loan, you need to think about three things. So first things first, think about whether or not you are properly established. Okay. You got to really be clear about that. Are you properly established? So I'm talking about you making sure you have everything in terms of your EIN, in terms of your incorporation or organizations, like things like LLC, LP, LP, S Corp, C Corp. So those are things, those are the basics, right? You want to get the paperwork from the state. You have your articles of incorporation, your articles of organization. This is the first thing you want to have. The second thing you need to have is you need to have a business bank account. So you got to have everything that really legitimize your business. That says that, okay, you got to have a business address, business phone number. Everything must be business related. Okay. And if needed, you can try to get like a business credit card too. It can be secured. Okay, the bottom line is you want to divorce your personal affairs from your business affairs. Okay, this will help you in the long run, not just from a tax perspective, but also from an operational analysis perspective. So you are able to differentiate what was really working, and you can really have peace of mind better that way. And the third thing I want to say here is you need to have those documents that give you the foundation, the analytical foundation for future success in your business. And those are stuff like business plan, documents like financial projections. Okay, because those two documents, for example, and there are others though, I just wanted to focus on those two. Those two will actually provide the operational fulcrum, the analytical fulcrum, the analytical the backbone for your analysis, for your future, for your vision. Okay, the analytical backbone for your vision, for your mission. Because the lender will see that you are organized, that you know that you're going far. The lender will understand that, hey, listen, this borrower knows what it's actually what they are trying to get. And in the business plan, you'll talk about how long you have in operation, your location, your industry, your projected annual revenue. So this kind of granularity, this kind of details is just fantastic and will help you in the long run get approved for a business loan with poor credit. Let me close to this conversation by talking to you. I want to give you the decision that you need to make here. What to consider when applying for a startup business loan with bad credit. Okay. And you need to really think about a couple of things. You need to understand when we talk about a startup business loan with bad credit, you have a couple of situations here. First of all, we're talking about bad credit at the personal level. But you got to think about what kind of credit you have at the business level, if any. Okay, because if you are a startup, as I said, a startup can be a business that has been in operation for less than 12 months. So if you have been in operation for 11 months, you are still technically a startup. So, but by that time, chances are you would have had established some kind of business credit. And if you do, that means that you have a paydex score, you have an IntelliScore plus. So the question is, do you have a poor credit score also when it comes to paydex? Because paydex, anything less than 80 is considered a poor, and above that, excellent. 80 is just like the average. So you got to think about that. That's the first thing. You also got to think about whether or not you need the funds real quick. Okay. And the third thing is, do you have maybe collateral to pledge in case you need to pledge collateral? Because some business loans will ask you for, or some business loan will ask that your startup collateralize the loan. Okay, that's the condition. That's the only condition upon which the lender will actually release funds. So if you are in such a situation, you got to ask yourself if you have the right assets to collateralize the loan, right? So those are questions I really want you to have. And but while you're doing it, also try to think about building business credit, okay? Because if you have poor credit on the personal side, try to beef up your business credit score. This should be an ongoing initiative of yours, so that you are constantly trying to look for things like net 30 vendors. You're looking for a business lines of credit. You're looking for business credit cards. All of those elements will help you build a business credit. Just make sure that the issuer or the lender is actually reporting your transactional activities to the three major business credit bureaus. Okay. And so when we talk about the three majors, we are speaking about Experian business, we're speaking about Equifax business, and we're speaking about Dun & Bradstreet. And if you're lucky, maybe the issuer will also actually report your transactional information to SBFE, Small Business Financial Exchange. Okay. The bottom line is you want your data to be reported to the appropriate business credit bureaus, so you can get the proper credit, literally. Okay, for your great deeds, for your great behavior, for your great routine when it comes to business credit. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just sharing with you a few hacks that we have learned here and there in terms of business loans for startups with poor credit. So I gave you the overview. I gave you a few pro tips. I give you the approach you need to follow. And we reviewed some of the things you need to review in terms of business loan for your startup. And I also give you a bonus in terms of choosing the right type of loan. And I give you the step-by-step you need to follow here. And finally, I close today's conversation with the decision you need to take into account when considering a business loan for your startup with poor credit. Thank you so much for your attention. I really appreciate it. God bless you. I'll see you next time. But until then, remember, stay marvelous.